I would imagine it will probably happen sometime next year where the Fed is officially more worried about the economy than inflation, even though inflation may in fact have risen. But if you start to see a big increase in unemployment, and in particular you start to see a financial crisis unfolding, if you start to see banks failing and other companies, unable to meet their obligations and starting to fold, that's going to scare the Fed. It's going to scare politicians a lot more than inflation. Even though in the long run, inflation is worse, in the short run, that's not what the politicians care about. And the central bankers are really just politicians disguised as bankers. They're not really independent. So I do think that the focus is going to shift. Right now, they're very public about they want to fight inflation because the public is upset about inflation. Inflation is a big problem. Everybody is dealing with it. Prices are up now, over the last couple of years, even the way the government measures them, I think they're up about 15%. But that means in reality, they're up about 30%. I mean, that is a huge increase in the cost of living. That's why so many people now have second and third jobs, because their paychecks have not risen nearly as much as their cost of living. And so they can't get by with one job. So they need two or three. And that's where all this job creation is coming from. But I think once the voters are more concerned about something else, then that's when the central banks are going to pivot, or the Fed, and try to prop things up. Except it's not going to work this time, because the way the Fed has always bailed out the economy and bailed out the markets and the government is by creating inflation. Well, it's one thing to do that when inflation is 2% or lower. It's another thing to do it when it's 5% or higher, because the justification for the cheap money was always that, well, we don't have enough inflation anyway, so we can kill two birds with one stone. We can get closer to our inflation target, and then we can also provide the stimulus. But what if you're double or triple your inflation target, and then you're going to throw gasoline on the fire in order to stimulate the economy? It's not going to work, because you're going to have a dollar crash, and then inflation is going to go through the roof, and that's going to complicate the problem that the Fed is trying to solve. Well, again, I think they're missing the mark on inflation, and everybody is just trying to figure out, has inflation peaked? And we got the CPI numbers today, and that's got a lot of people saying, you see, inflation has peaked. It's not about whether or not it's peaked. I don't think it has, but that's not the real important fact here. The important fact is that inflation is much higher than it used to be, and it's not going back down. That the days of 2% inflation are gone, and we're not going to go back there again. And so inflation is going to be double or triple that number, and that is a game changer for everybody. Not only for the Fed, but for investors, because what worked in an environment where interest rates were really low and inflation was really low at the same time, types of investments that thrived during that environment are not the type of investments that are going to thrive during a high inflation, higher rate environment, which is the one that we're in. And so investors have to recognize this shift, and they have to make the changes to their portfolios. But most of them are still wedded to what worked during the bubble. And they don't even realize that it was a bubble. I knew it was a bubble because I didn't even participate. I just watched it inflate from the sidelines. But now all the assets that I've been buying for the last decade, those are the ones that are performing. In fact, if you look at our two main strategies year to date, our counts are positive on the year, and they're all in stocks. We're long stocks, we're not short, and they're foreign stocks. And even though you have about a 10% rise in the dollar, our portfolios are positive on the year in dollars. And so this is a big shift, because we own value, we own dividend-paying stocks, we have resources, and this is where investors are just finally starting to shift. And I think we're at the early stages of this rotation. And so, the sooner you make the rotation, I think the better, because you're going to participate in the biggest moves, which are going to happen in the early stages. I'm not saying that you can't make money if you're nimble and you're a trader. You can't buy and hold these stocks, because they're going to keep making new lows, because they don't have the valuations to support their stock prices. Now, in the past, nobody cared, because stock prices were supported by cheap money and low inflation and the mania. There was all this momentum chasing them. But when that momentum isn't there anymore, when the money is just trying to get out, because remember, there's a lot of people who own these stocks who are going to be looking to get rid of them on any rally. But meanwhile, the stocks that I own and the ones that I'm buying, these are the stocks that nobody owns. These are the stocks that everybody sold to buy the FANG stocks. Now they got to buy those stocks back. because you still can't hold cash because inflation is eroding away its value. You can't really buy bonds because even though the yields have gone up, they're still negative in terms of inflation. So you still have to buy real assets. And stocks are a good asset to buy, but you just can't buy, an index. You have to be a stock picker. You have to buy particular companies that have real earnings today, not, maybe earnings in 20 years, but they're earning money right now, paying dividends right now, and they're selling products or services that customers need, that they have to buy, and they will buy them even if the price goes up. Maybe they'll buy a little less, maybe they'll cut back on something else in order to afford to buy, but you have to be in a position where you have the pricing power and you can stay ahead of inflation. Apart from the resource sector, and that would be industrial metals, agriculture, energy, other obvious places to be invested. We're invested in other businesses, whether it's utilities that are, providing people with power that they need in their lives, or healthcare companies, medical services, which we all need. And so health is important. And so these healthcare companies are there. Almost an opposite side though, but is tobacco, because people like to smoke. And so these tobacco companies, if you're addicted to smoking, you're going to smoke. And if the price of cigarettes goes up, well, you're going to keep smoking, and you'll find a way to pay for it. I mean, those stocks pay good dividends as well. There's all sorts of companies that service, let's say, the agriculture or the energy sectors, telecommunications. We own quite a few of those. Those stocks have kind of been left for dead for a while. They're pretty cheap, but there are a lot of different companies that have real value. People have to go somewhere. I think you just can't be in cash because all these governments are just printing too much money. The inflation problem is worldwide, and it's because all these central banks made the same mistake. And unfortunately, they were pretty much following the Fed's lead. We are the issuer of the reserve currency, and so everybody else kind of, marches to the beat of our drum. And we had interest rates at 1% or 0, and so everybody else had to come down. In fact, some countries went negative because they wanted their rates to be lower than ours. Well, when our rates are 0, how do you get below 0? So they actually went into uncharted territory in the twilight zone of negative rates. That was only because we were at 0. But I think the world is going to reject the dollar. It's already happening. I mean, in fact, with the sanctions that have been imposed on Russia and the example that we've sent to the world, I already think, the Chinese and a lot of other players are just not liking that and really wanting to take away some of America's power. And the source of that power is the reserve status of the dollar. And we lose that, and it's a whole new ballgame here, because America's ability to live beyond its means is a function of the dollar's reserve status, because we can print dollars and use those dollars that we print to buy goods and services, mainly goods that we didn't produce. It's kind of like these guys that issue cryptocurrencies out of thin air, right? That FTX token cost Bankman-Fried nothing to create, and he could just issuing them and have this huge value. Well, we do the same thing with the dollar. It costs us nothing. We create them out of thin air, and then everybody assigns a value to them.